Good morning, everyone. My name is SHALMI and I'm from 21E Group 7. On behalf of my team, I would like to welcome you to our presentation. Today, we'll be introducing you to Wonder Potion, a Malaysian brand under LMRJ Enterprise that is transforming self-care routines into delightful and indulgent experience. Wonder Potion specializes in artisanal body care and fragrance products, but inspired by desserts with scents like buttercream vanilla, caramel marshmallow, and pandan chiffon cake. These products don't just pamper your skin. They also offer a luxurious sensory experience that makes everyday self-care extraordinary. As the beauty and personal care market in Malaysia continues to grow, Wonder Potion stands out with its playful yet high-quality approach, resonating with young adults and fragrance lovers alike. We will take you through the brand's mission, unique products, and customer reviews to show how Wonder Potion brings joy and indulgence to everyday life. With that, let's dive into the details. I'll now hand over to my team members who will explain more. Thank you.
Hi everyone, today I want to talk about the financial challenges facing Wonder Potion, a health and wellness company. Wonder Potion is currently facing a severe liquidity crisis which occurs when a company struggles to meet its short-term financial obligation. The core issue here is a mismatch between cash inflow and outflows. The company is struggling to pay suppliers, employees, and creditors due to delayed payments from large clients, overstock inventory, declining sales, rising operational costs, and short-term debit obligation. This liquidity issue is putting the company at risk of operational disruption, damage or reputation, and difficulty securing future financing. If not addressed, Wonder Potion could face layoff, decreased productivity, or even bankruptcy. However, by tightening credit terms, reducing excess inventory, cutting costs, and exploring short-term financing options, Wonder Potion can stabilize its operation and prevent further financial decline. With the right strategies, the company can overcome this crisis and get back on track. Next, I'd like to address the challenge Wonder Potion is facing in securing financing for its expansion. Despite being a growing health and wellness company, Wonder Potion is struggling due to insufficient cash flow, high debit levels, and inconsistent profitability. The company's current debt, including substantial short-term loans, is limiting access to additional credit, making investors hesitant to provide more capital. Moreover, Wonder Potion relies heavily on a few core products that are facing increasing competition, which has reduced its overall revenue potential. To overcome this challenge, Wonder Potion must focus on improving cash flow, reducing operating costs, and diversifying its product range to appeal to investors and lenders. Exploring equity financing by bringing in new investors could also be a key solution. These financial hurdles are addressed. Wonder Potion risks telling its expansion and limits its long-term growth potential in the competitive health and wellness market.
The next point is cost reduction. In challenging economic conditions, maintaining profitability and financial sustainability is vital. For Wonder Potion, implementing cost reduction measures ensure better cash flow, operational stability, and competitive pricing. One key area is operational efficiency. By streamlining processes, the company can minimize waste and improve productivity. For instance, adopting lean manufacturing practice can reduce excess inventory, while automating repetitive tasks like packaging or inventory management can lower long-term labor costs. Supply negotiation can offer another significant opportunity for saving. Renegotiating contracts or exploring alternative suppliers with competitive pricing can help reduce raw material costs. Establishing long-term partnerships may also lead to volume discount and better payment terms. Technology integration is another assistance strategy. Implementing ERP system provide real-time insight into production, inventory, and sales, aiding in cost control. Additionally, investing in energy-efficient machinery can cut utility costs, especially as energy prices rise. Finally, outsourcing non-core activities such as logistic or administrative tasks can allow the company to focus on its strengths while benefiting from cost efficiency. Meanwhile, energy-efficient practices like LED lighting and solar panels not only reduce costs but enhance Wonder Potion image as an eco-friendly brand. In summary, through this cost reduction strategy, Wonder Potion can strengthen its financial health while positioning itself for sustainable growth. Now, let's address the challenge posed by rising production costs, which significantly impact profitability and pricing strategies. One major factor is the increasing price of raw materials. For a company like Wonder Potion, which relies on material ingredients, volatility in herb and botanical extract costs, driven by supply chain disruption or environmental factor, can sharply raise expenses. Labor costs are another critical challenge. Rising wages and a shortage of skilled workers in Malaysia intensify the competition for talent, making it more costly to attract and retain employees. Regulatory complaints further adds to the burden. Meeting stricter standards, such as obtaining organic or halal certification, require additional investment in processes and equipment. Inflationary pressure compound this challenge, affecting raw materials, utilities, transportation, and maintenance. For example, higher fuel costs increase shipping expenses, which directly impact product delivery costs. Finally, supply chain disruption. It caused by global event or natural disaster. It can lead to expensive alternative or additional storage costs. This rising production costs reduce profit margins, hinder investment, and limit pricing flexibility. If passed on to consumers, higher prices risk losing market share to more cost-efficient competitors. To address this challenge, Wonder Potion can adopt proactive strategy like diversifying suppliers, improving manufacturing efficiency, leveraging technology, and exploring alternative materials. Additionally, forecasting tools can help the company anticipate and mitigate cost fluctuation.
Good afternoon. My group member, Chawanji, and I will be presenting a comprehensive financial analysis of Wonder Potion, focusing on its income statement, balance sheet, cash flow statement, and key financial ratios. We will also discuss the company's financial health, highlighting both strengths and challenges. We aim to provide insights into Wonder Potion's current financial position, its operational efficiency, and areas for potential growth or improvement. So, let's start with the income statement. Wonder Potion generated a total sales revenue of 250,000 ringgit. The cost of goods sold which includes raw materials, manufacturing, and packaging, amounted to 100,000 ringgit, which means 40% of the revenue. This leaves a gross profit of 150,000 ringgit or 60% of the revenue. Operating expenses, which include marketing, rent, salaries, and other costs, total 80,000 ringgit, representing 32% of the revenue. After deducting this, the company achieved a net profit before tax of 70,000 ringgit, translating to a strong net profit margin of 28%. These figures indicate that Wonder Potion operates with a high level of efficiency, managing costs effectively to maximize profitability. Next, looking at the balance sheet, Wonder Potion's total assets stand at 100,000 ringgit, comprising 40,000 ringgit in current assets, split evenly between cash and inventory, which means 20,000 ringgit, and 60,000 ringgit in non-current assets, including machinery and office equipment. On the liability side, the company has 20,000 ringgit in current liabilities and 30,000 ringgit in non-current liabilities, primarily a business expansion loan. This brings total liabilities to 50,000 ringgit, balanced by the same amount in equity.
Thank you, Jinhong. My name is Travanjin, and now I will continue to the part of financial analysis. So, for the cash flow statement, reveals a net cash inflow of 40,000. Operating activities contributed 50,000, while investing and financing activities resulted in a net outflow of 10,000. This indicates the company is generating positive cash flow while also reinvesting in its operations. Now, let's examine the key financial ratios. The operating margin is 28%, reflecting efficient cost management. The return on assets (ROA) is 70%, and the return on equity (ROE) is an impressive 140%, showing that the company effectively utilized both its asset and equity to generate profits. The current ratio of 2.0 indicates a strong liquidity position, ensuring that the company can meet its short-term obligations. The asset turnover ratio is 2.5, highlights the efficiency in utilizing assets to generate revenue, and interest covering ratio of 14 suggests the company is well positioned to handle its debt obligations. In terms of strength, Wonder Potion is highly profitable with efficient operations and excellent liquidity. The inventory turnover ratio further emphasizes strong operation management. However, there are challenges. The debt-to-equity ratio of 1.0 suggests reliance on debt financing, which could become a concern if revenue declines. Additionally, the company may need to explore further funding opportunities to support future growth. To conclude, Wonder Potion is financially healthy, with robust profitability and liquidity metrics. However, strategic planning is needed to manage debt levels and secure funding for expansion opportunities.
Good day everyone. So today I will present the key recommendations to address the financial challenges faced by Wonder Potion. The focus area are resolving the liquidity crisis, securing financing for expansion, tackling rising production costs and reducing the operational costs. So let's dive right in. So the first one is liquidity crisis. To address the liquidity crisis, one portion should implement the short-term and long-term strategy. So in the short term, the company must tighten the credit terms, reduce payment durations for clients, and offer the discounts for early payments, collecting overdue accounts receivable, and liquidating the excess inventory through the discounts can provide immediate cash inflows. For the long term, adopting robust cash flow forecasting tools and diversifying the income streams will help to predict and manage the future shortfalls effectively. Secondly, financing expansion. So to secure funding for expansion, one portion needs to strengthen the financial position by enhancing the profitability through the operational efficiency and cost cutting, attracting equity investors by offering stakes can raise the capital without adding debt. So additionally, collaborating with experienced investors or larger players can provide the resources and market access to expand the brand into the Southeast Asian or beyond. The third one is increasing the production costs. To combat the rising production costs, one portion should diversify its supplies to reduce the reliance on the single source. So implementing just-in-time production methods can lower the inventory holding costs. Strategic pricing adjustment that align with the production costs while effectively communicating the premium value of the products to the customer will help them to maintain the competitiveness. Optimizing labor costs with the performance-based incentives can also boost productivity. And lastly, for cost reduction, so cost reduction strategies are essential. So introducing the ERP system will streamline operations, reduce waste, lower inventory costs, and lower the inventory costs. Investing in solar panels can cut the utility expenses that can save like 2,000 monthly after an initial 50,000 investment. So strengthening the supplier relationships can also secure the bulk discounts and lower the transportation costs and can reduce input expenses by up 15% annually. So in conclusion, by adopting these strategies, one portion overcome its financial challenges, stabilize operations, and position itself for sustainable growth in the competitive health and wellness market. So thank you so much.
Hi, my name is NAJIHAH ZULKIFLI, and let me summarize the conclusion for Wonder Potion. Wonder Potion, a unique Malaysian brand under LMRJ Enterprise, has successfully carved a niche in the health and wellness market with its dessert-inspired body care products. However, the company is facing critical financial challenges, including a liquidity crisis, difficulty in securing financing for expansion, rising production costs, and efficiency in cost management. To address these challenges, we recommend proactive strategy. These include improving liquidity through better cash flow management, securing expansion financing by attracting strategic investors, reducing costs with efficiency systems like ERP, and managing production expenses through methods like JIT inventory management. By implementing these strategies, Wonder Potion can stabilize its financial health, sustain growth, and maintain its competitive edge in this highly dynamic market. So that's all from our group. Thank you for watching and listening. Have a nice day.